All right. Now we should get some audio here, so we should be okay. Okay, so hopefully now the audio comes through. Let's take a look and see here. There we go. Now it's working. All right, all right, all right, all right, all right. Pop out chat. Eventually, I'll do a video on all this stuff that I've learned. Okay, so now, basically, start from the beginning. So we're gonna go over several things during this video. We're gonna go over HR 7024, all the updates on 7024. Um, Give me 1 second here. All right. So we're going to go over 7024, what's been happening with that bill, where it's at in the process of it being approved or not. We're going to hear some commentary from Chip Roy. Chip Roy is one of the representatives here in San Antonio, Texas. Um, he's talking about border policy, but he does make some interesting points on certain things. So we're going to go over that aspect of it. We'll go over the federal tax brackets so you can kind of see what that looks like and generally how the U.S. tax system works. Yes, it's complicated, but it does follow a pattern, right? And then we'll go over the certification so you can understand when you're dealing with a tax preparer what the available certifications are, and not just that, we'll go over some something called ghost preparers. Okay, so yeah, let's get started on that. So this right here is, and if you can't hear me, just comment, and then that way I can respond. But if you can hear me, also let me know. Just make sure you comment as well. Um, as far as the 7024 bill, right? So this is the 7024 bill. Let me go ahead and put that up on the screen here. Okay, so this is Bill 7024. It's up in Congress. It was introduced by a Representative Smith, Jason Smith, right? Basically, the bill is going to make some changes to the child tax credit. Certain deductions are also going to be affected by this, and we'll go over in detail what those are. But this bill right now, if you can see, I'm on Congress.gov. It gives you a really good overview of what's happened with it. So as of right now, it's passed the House. Right now, as of the first, the Senate has it in their hands. So now the Senate has to vote on it. Whether it's going to pass or not, who knows? But if it does pass, it is going to affect their 2023 taxes. Some people say just file it now and then wait for them to make the change, or wait for the IRS to make the change for you, and then they'll send you an additional check. I tend to be a little bit more skeptical about the capabilities of the IRS. So it's better to do it right the first time, so that way there's no issues with them. Oh, they messed up the check or they send it to the wrong house. I've seen a lot of crazy things happen, right? So that's not to say wait until May. If the vote is in May, wait until file your taxes till May. No, I mean, if by the end of February nothing has happened, or beginning of March nothing has moved on this, then just go ahead and file your taxes. Eventually, if you have to do an amended return, then that's just what has to happen. But as of lately, what has happened with the tax code is, especially during election years, a lot of representatives love to reintroduce these late bills, and it creates total chaos in the system. Um, that it's like we'll talk about this in a future video, but the 1099K thing that's been happening for about 2 years, where they're going to start sending out 1099Ks, like if you're using Venmo or Cash App or whatever, and it's a business account, right? And they're going to start sending out those 1099Ks if you have over $600 in expenses, or you receive $600, right? If you do receive that 1099K, then you have to actually claim it. So they delayed that, but we'll talk more about that bill in future videos. For now, we're going to talk about this one here. It's basically right now at the Senate, so we're just waiting to see what happens. As far as what's in the bill, this right here is a general report by the Congressional Budget Office. So they put this out on the 25th of January to kind of give an overview of what the bill is. The bill is a couple hundred pages. So this kind of consolidates everything into one document. And so we'll just go over the highlights of what those changes are in the system, right? So give me 1 second here. Let me take a look. Okay, yeah. So those changes are going to be as follows, right? This report goes over like how much money it's going to make for the Congress. A lot of it is theory, right? Accounting theory. So let's just go into the actual bill, right? So, okay. Basically, Title I, tax relief for working families, right? So right now, what is going on is the provision would increase that maximum refundable credit from $1,600, which is what it is now if you file your taxes, and it'll increase it to $1,800 per child if you qualify for 2023, and then it goes up with inflation every year until 2025, up to 2,000, right? But they're making this retroactive to 2023, so it's not like it's going to start in 2024, make planning easier for taxes. No, it's happening in 2023. So if you file your taxes early, which a lot of people I know did, you might have to do an amended return to reflect the changes, or they might just actually send you the right amount. You just have to kind of keep an eye on what happens with this bill, and that way you can know, hey, okay, they're going to require amended returns, so that way you can actually take advantage of the tax credit or not, right? Another thing that's changing with the bill is the the employee retention tax credit. So basically, this credit was enacted during COVID to help businesses stay afloat. So they were, the government was giving a bunch of money to a bunch of different small businesses if they were affected by the COVID. And then the businesses, in theory, were supposed to use that money to keep their employees on staff. But what was happening a lot, and what has been happening, is, the businesses will get the money and go buy a Lamborghini, or, go on a vacation to Tahoe. So it's one of those things where the IRS does have an eye on it, and they're going to start cracking down on those people that took those credits. So just make sure your paperwork is in order. With this tax bill, as of January 31st, no more ERTCs, right? I've actually been approached by a lot of different businesses saying, hey, we can help your clients with this. I just try to avoid that unless it's a absolute, okay, you 100% qualify for it, because they're keeping a close eye on this ERTC thing, as you can tell by this new legislation here, right? So that's another thing that's changing. They're essentially going to go away with that bill Let's see what else here I highlighted. Oh, let me go back up here. Okay. So then there's going to be some additional credits, right? So for example, research and development usually has to be capitalized over 5 years. So basically you can't, like, let's say you spend, $20,000 on researching or doing surveys, things of that nature. You wouldn't be able to take all that up once. You have to spread it out throughout 5 years. Well, with this bill, what they're saying is if you did do expenses, research and development, domestic research and development expenses, then you can just take that all during the tax year that it's occurred, which is 2023, right? That's what we're talking about. So that's huge for some businesses, right? So it could be a thing where if you did some research and development and you spent a lot of money in researching software, whatever it was, and you want to take that whole deduction for the year, this is going to be huge for your business, right? So keep an eye on that as well. I mean, if it gets close to, like, for example, the filing deadline for S corporations, then just go ahead and file the return. And then if you have to do the amendment on it, then do it. Kind of the same thing as with the personal taxes. Next thing here is, let's see, extension of 100% bonus depreciation, right? So it looks like they are looking at extending this bonus depreciation. Under current law, depreciation will be reduced by 20% over the next several years, but now they're looking at extending that 100% depreciation, which makes sense if they're also looking at the research deduction, right? If they're looking at actually implementing 100% of that, it would make sense for them to look at bonus depreciation and allow 100% of it going forward. Oh. Hold on 1 second. Yeah, you should be able, Tanner, you should be able to join just go back to the channel and you'll see the new live. You should be able to join the new live. I'm on it. It's just I don't want to hear myself, so I mute it. So yeah, you should be able to see the new live. Okay, so increases in limitation on expenses, depreciable business assets. So right now, under Section 179, businesses can expense $1 million for eligible property. That will reduce. That amount is reduced if the value of the property exceeds 2.5 million. Right? Not a lot of people have 2.5 million in assets. But what they're doing now is they're increasing that limitation to 3.05, right? So beginning in 2024, taxpayers can expense 1.22 million, and then that amount goes up to 3.5 with inflation. So essentially, they're looking at increasing that limit so people can actually take more depreciation on different assets. If you own a farm or something and you have, a lot of land and not a land because you can't depreciate land, but a lot of improvements on that land, then yeah, that might be something that may affect you. But I don't see this affecting the average taxpayer because not everybody has $1 million in depreciable assets, right? I know I don't. So this one is interesting. So they've made several provisions to help citizens of Taiwan. So basically, Taiwanese taxes on income from Taiwanese sources earned by U.S. residents would be reduced. I mean, I'm not sure why they're including Taiwan. Like I said, politics and taxes are kind of one and the same. So for whatever reason, they're including this provision for Taiwanese sources of income, basically where they're going to reduce what is taxable if you have a source from Taiwan. There are certain agreements. So the U.S. has agreements with different countries, Dominican Republic, there's a bunch of different countries basically that the U.S. has agreements with, where those countries if you're making income in those countries, they will report the income to the U.S. So they have it, and then the U.S. can say, hey, you didn't report your foreign earned income, and that is a nightmare. So if you do have foreign earned income, and there is that tax agreement in place, just be careful if you don't report it, because the IRS can come back and they'll wait 3 years, 4 years, 5 years, and they'll come back and say, hey, guess what? You didn't report all this income. We're going to do a full compliance audit. Oh, and by the way, because you didn't report it, now you have a 100% penalty on top of the interest that we're going to charge you, or you might, you might go to jail with foreign earned income. So, yeah, when it comes to foreign income, it's a problem. But with the Taiwanese provisions that they're including in this bill, I guess they're getting a little break if you do business in Taiwan. Let's see. Okay, so they are extending certain rules for disaster-related and casualty losses, right? Casualty losses for disasters occurring from January 1st, 2020 through the date of enactment to be taken on tax returns without itemizing deductions, right? So usually when you're taking some of these deductions, they go on Schedule A, but now they're saying, no, you don't even need to do that, right? And in order to itemize your deductions, usually it has to be over that amount, which, over the exemption amount, which is like $12,000. It goes up every year, right? But it doesn't make sense to itemize. Well, rather, you can't itemize, really. It doesn't really make sense to, anyway, if you are below that amount. But now you can actually take this casualty deduction without having to itemize, which will be good for a lot of taxpayers, because this is something that can affect a lot of people, depending, especially if you're one of those disaster areas. Let's see. Exclusion from gross income from compensation for losses or damages resulting from certain wildfires. So California, notorious for wildfires. So if you were a victim of any kind of wildfire, they're going to would exclude from gross income compensation for expenses or losses resulting from certain wildfires. So they're not going to include that as income. State housing credit ceiling increase for low income housing credits. So what's happening with this is, let's see, would increase the amount available to states under the low income housing tax credit program by 12.5% for tax years 2023 to 2025. The change applies to what are known as Program 9% credits. Let's see, JCT estimates that enacting 501 would reduce revenues by 2.7 billion. And then the idea is some of this money is going to go back to those people that are within those low income housing areas and are claiming that credit. Tax exempt bond financing requirement will reduce the qualifying threshold for certain projects that are financed by tax exempt bonds. Awesome. Perfect. Yes. LinkedIn can hear me. Yeah. I essentially I had to plug in my second mic because my software is all kind of weird now. So I have to figure out why that is, but yeah, that's what happened. Okay. So we have bond financing requirements. So it would reduce the qualifying threshold for certain projects that are financed by tax exempt bonds. So in the current law, to qualify for the LIHTC program, at least 50% of the building's cost must be financed by those bonds. Section 502 would reduce that threshold to 30%, right? So this will probably affect a lot of those developers or construction people that are actually using tax exempt bonds for building infrastructure. I know here in San Antonio, there's like tons of construction going on right now. Highways, buildings, residentials. They just built an apartment complex in Converse. They're still building it. So this might affect, if especially or the charter schools. There's some building going on with charter schools. So this may affect this may affect those developers. So they'll be able to claim those tax. We'll be able to claim that essentially those exempt that money from income. Let's see what else here. Okay, eliminating fraud. So this is going to be would increase the threshold required for businesses to issue forms 1099. So in the current law, businesses must issue those tax forms to independent contractors and subcontractors that are paid more than $600 a year. This provision would raise that threshold to 1,000, right? So if you're working for Uber, or if you have a rental property and you only made it less than $1,000 on it, you won't get issued a 1099 NEC. The IRS says you have to claim all the income, right? You just won't have to issue a 1099 unless it's $1,000. So I mean, that can affect a lot of small businesses. So it's one of those things where it's like it's just gonna throw the system into a loop if they retroactively make all these changes, right? I don't know if it's gonna pass. It's there's good and bad to it. I mean, I can actually sit down and analyze it in a future video, but it's definitely going to make compliance a little bit more difficult. Let's see, employee retention tax credits. We kind of talked about that, and so now it just talks about different provisions and how it affects macroeconomics and all this other stuff, right? So basically those are going to be the provisions within the bill. It's like I said, it's sitting at the Senate right now. We're still waiting for it to pass, if it's going to pass, but I'll make sure to keep you all updated on this as it develops further, right? But now I want to actually go to Chip Roy because he talks about some interesting things. I saw this video the other day, and it's interesting because every time I see these videos, there's nobody in the background, right? So it's like, it's almost like they're talking to an empty room, which leads me to believe, like, how invested are these people really into tax policy and just making the right choices, right? Because there's nobody there, and there's no discussion aside from his talking about it. So I want to go over this video because I haven't seen anyone really talk about it. This is Chip Roy, so we're gonna go over certain. We're gonna go over. This video is talking about the border crisis, but he talks about taxes and just in general how government regulation works. So there's 3 clips that I want to show you. So the first one's gonna be, I'm gonna go to 220. We're going to listen for about a minute. See what he has to say. Gotta love the ads. Squarespace. Oh, okay. What is this?
What is making it difficult for American families to live? Because I think we all agree it's really difficult right now for an American family to live. I know my family feels it. I know my friends' families feel it. They're trying to figure out how to live, how to afford anything, whether they can send their kids to school, whether they can pay for health care. I would suggest, and my Democratic colleagues would disagree, I think most of my Republican colleagues would agree, the fundamental problem is that we've inserted the government into every aspect of our life. Literally every stinking thing we do, the government has a hand. It is regulating us to death, choking out every bit of entrepreneurial spirit, every bit of the ability to get through the day without having to figure out what regulation or what law or what rule you've got to go abide by.
And so, and that's why people like us exist, right? We shouldn't. If you're asking my honest opinion, my profession should not exist. It should be a flat tax. Everything gets taxed at X%, and that's it, right? But it does, because this is what happens, right? So let's keep listening here.
I can't even get in my car and figure out how to turn something on without figuring out some safety device. I can't fix the windshield without having to fix some regulatory thing that's allegedly there to make me safer that makes the car twice as expensive. We are making ourselves absolutely incapable of achieving the American dream. We're doing it to ourselves. That's what is happening. And yet we just keep doing it over and over and over again. And this is, I think, the question of the moment. What are we going to do to restore the American dream for the American people? We, the representatives, here in the House of Representatives, the people's.
So basically, yeah. Right now, the tax code is over 70,000 pages. When you include all the different aspects of it, right? The tax laws that are enacted based on some case that goes up to the U.S. tax court, the actual code, the actual IRC, and then the bulletins, right? So it just seems to be growing and growing and growing. So he's right. We are doing this to ourselves. Again, my profession exists because of all these regulations, but at some point, it's just going to become counterproductive, right? And then that's why this bill is there's so much things in the bill, and sometimes these congressmen don't have the time to read it because they drop them at midnight, and so then they vote on a huge bill that nobody reads, and it just the cycle continues, right? So let's keep going with the video. He also makes another comment here. Let me go ahead and skip to it. This is more about defense spending and tax policy.
This town has been badly broken. This swamp that President Trump ran against has been consuming any ability for representation for a government to actually serve the people. What we have instead is effectively a bipartisan uniparty for decades now that has been driven almost entirely by spending massive amounts of money for government programs and for foreign aid and for, most importantly, the defense complex, the defense world, driven heavily by war. We have done that, and we have then messed around with tax policy.
So, essentially, that's exactly right. And that's what's actually happening right now, right? Because of all the different things happening politically with Ukraine and Israel and all these other things, now they're messing with tax policy, right? And what this channel was not meant to be a political channel, but taxes and politics are so intertwined right now that it almost is going to be that, right? And so, yeah, so basically they mess with the tax system, and then just to cover all the, and believe me, I've been in every industry. I've been in law enforcement. I was an FBI agent. I've been in the DOD. I've worked on many different projects. I've been in corporate America, been in contracting. I've been in the state government. I've seen the machine and how it works. And everything he's saying is dead on, right? So let me go to the next one here. And this one could be a little controversial. Now, I'm not saying to do it, right? But it's the thought process that happens to some people when they see what's happening, that their lives aren't increasing when they go to HEB, which is the local supermarket here in San Antonio, or in Texas, which is awesome, by the way. When they see that, when they go to HEB, they can't afford groceries because, a steak is $50 or whatever it is now. I mean, I stopped buying beef because it just got too expensive. So let's go to this clip here that he talks about. That's kind of like, well, don't open that door. Oh, another one. All right.
Bipartisan uniparty bill will get voted off of this floor. Here. It does not a damn thing to fundamentally alter what's happening at the border, while Texas takes it on the chin. Why should Texans pay their federal taxes? Why? Why should Texans give a rip about what we do in this body?
I didn't say it.
When it's all against them. It's all against us as Texans. For that matter, why should anybody pay taxes? The rule of law matters if you want people to follow it. If you're printing money, destroying the dollar and destroying the economy and bloating the government and hiring and funding bureaucrats to undermine your liberty, to pass regulations, to take away your happiness and undermine your ability to prosper, you're printing money and borrowing money to do that. What is the point of paying your taxes? It hurts to write that check. It hurts to lose that money to go to the federal government. But if the federal government is just going to spend money anyway, why do Americans believe that they have a duty to go pay the taxes? So we pay $2 trillion in taxes but borrow $2 trillion, or pay $4 trillion in taxes but borrow $4 trillion? That's crazy.
So, yeah, and the economy and I guess the government stopped using tax revenue to pay for stuff a long time ago. Because what they do is they just borrow, right? And that's been going on for years. This is apolitical, right? It doesn't matter, Republican, Democrat. It's been happening since probably the beginning of time, right? Well, for a long time, at least since I've been an adult, which just happened, but okay, no. So, yeah, so why? So why, his point is why would anyone pay taxes if they know that the people that are, I know I'm preaching, but it's one of those things where I don't understand. The tax code is so complicated, and it's complicated for a reason, right? And every year they introduce new complications to it, right? And they do that for a reason, right? Because if you know anything about taxes, and if I've learned anything about taxes, is they can get anyone at any time for anything. On the tax code is the catch-all. If they can't get you somewhere else, they'll get you with the tax code. So he has a point, right? There's so much going on with tax policy and all these changes with tax policy and spending and all that it's crazy how what's happening now, right? So that was just Chip Roy. I encourage you to actually go watch the entire video because he does make some good points about the state of the economy and the state of pretty much Texas and how everything's going on. But now having said that, let's talk about the tax brackets, right? And in general, how the tax system works, right? So taxes in general is a way for the government to social engineer, right? I said it, right? So there are child tax credits, for example, because they're encouraging you to have children, right? There is married jointly gets more credits than married filing separately because they're encouraging you to get married. They're encouraging you to buy a house, so they issue you a 1098, which you can then put on your taxes if you meet the threshold to deduct the interest and the taxes on it, right? Usually you won't if you live in Texas, the great state. But if you're in a state like New York, you might actually be able to take that because you're paying $20,000 in taxes, right, for a property. But that I'll get into that at a later video. We'll analyze all the different state taxes and we'll go through that. One thing I did not mention. So yeah, we're gonna go over tax brackets, but before I do that, I wanted to make you all aware of this. I have we're going to public. What is it? Tableau. I didn't have this up. So this is my Tableau public. Actually, hold on a second. Let me just log in. Here we go. Sign into this real quick because what I did was I tried to see if there was any kind of pattern in terms of who voted for the bill and who voted against the bill. Here, let me. Okay, so this is my Tableau public profile. So on here, I'm gonna start just analyzing different data and stuff. Like I'm working on some projects, looking at tax returns of certain individuals. I'm not gonna say who yet, but I'm working on that. Right. So um, these are just some visualizations as far as different things like tax preparers here in San Antonio, and then I was actually looking at COVID information back then when COVID was around. But let's look at this bill, right? So what I did was I looked at the who voted yes and who voted no. And you can see here it's pretty much down the middle. So Republican and Democrats voted right down the middle for the bill. However, there were more Republicans that voted against the bill than Democrats, which would make sense, right? They don't want the overspending with the government. And then what I looked at was, okay, well, let me see if there's some kind of pattern in terms of the state, right? Like the state where this is taking place. So if you look at this is just a breakdown of the states that had the most influence in terms of the nay votes. So in Texas, we had 4 Republicans that voted no, and then 3 that voted yes, or 3 Democrats that voted no. So you can see the majority of the nay votes were coming from California. Believe it or not, a bunch of Democrats didn't vote for the bill. Arizona, Texas, Florida, New York, kind of split right down the middle, didn't vote for it. Wisconsin, and then you have these other smaller states that voted nay. Now, when you compare that to the yes votes, so these were the ones that didn't vote, right? So there was one that didn't vote in Texas, one that didn't vote in Louisiana. But when you look at the yes votes, so this is kind of the most influential states, right? So 35 voted yes on the Democratic side in California. Makes sense. California is more Democratic than Republican. 11 voted yay. So pretty much the states that were the most influential were California, Texas, Florida, New York, Pennsylvania, Illinois. And then those are pretty much the states that are driving this right now. North Carolina has some play in it. These little ones, 1 or 2 votes. That's just is what it is. I couldn't really find a pattern between the 2 different parties. Essentially, everybody wants this because it's an election year. So, they want to put money in people's pockets. But that's another conversation for another time. Okay, so now that we did that, we looked at Chip Roy, let's look at the tax brackets. Here's how taxes in general work, right? You have your tax brackets, you have federal taxes, state taxes, sales taxes. There's a bunch of in-between taxes, right? Death taxes. But the tax brackets are as follows. So basically, if you made up to $11,000, you don't get taxed, right? Or the tax rate is on taxable income from 0 to 11,000, that's 10%. But you don't really have to report past a certain amount, right? So the tax code is progressive. So basically what that means is the first 11,000 is at 10. The next 30,000 in this case, or from 11 to 44, that gets taxed at 12. The next 44 to 95 gets taxed at 22, right? So if most people, I have to actually look at Department of Labor numbers, but most people can make anywhere from 45 to 85, 90,000, right? So that money is being taxed at 22%. So if your withholdings are at 10% from your job and your tax bracket is at the 22%, you're going to end up owing at the end of the year, right? So that's why it's important that you look at that W-4 and look at that W-4 calculator on the IRS's website, so that way you can get that squared away. So yeah, the system is progressive. So if you're making over 578, and anything over that is being taxed at 37%, unless you find some tricky ways to legally, I'm not saying illegally, legally kind of avoid those taxes, right? And that's if you're single. If you're filing as a single payer, right? Um, it's different if you're filing married. The numbers change. So again, it goes back to incentivizing you, right? So if you're married, the first 89,000 of income is taxed at 12%, right? So the progression is a lot lower um, when you combine both the incomes, right? Um, but so that's kind of how it works. So then anything over 693, it's at 37%, right? And then you have your credits. So some credits are refundable, some credits are not refundable. The child tax credit is partly refundable, right? So that is where they're going to issue you a refund check on top of any reductions in the tax that you owe. So it's pretty much tax, income, federal income tax, um, and then the credits that are associated. That's generally how it all works, right? And then when you're taking certain deductions, you have to meet certain thresholds. There's a bunch of deductions, each has different thresholds, but in general, those are kind of the three things that you can do. And if you're a W-2 employee, don't think that there's a secret sauce or a secret magic or a secret deduction out there that you can take. You're pretty much on your own, right? The tax code is geared towards business owners, and I can elaborate on that in a later video. But that's generally how the tax code is organized here in the U.S. So the last thing that I did want to talk about then now is understanding the different certifications. So me, myself, I'm an enrolled agent, right? So enrolled agents, if you read this right here, I had to pass 3 exams, individual law, and then business tax, right? So each exam is its own nightmare, but I passed it. They did the background check. They let me become an enrolled agent, which means that I can represent people in front of the IRS, right? So if you have an issue in front of the IRS, you sign a power of attorney to me, and I essentially act as your attorney. Again, I'm not an attorney, but I can actually represent you just in front of the IRS. Certified public accountants have the same abilities, right? The only difference between enrolled agents and CPAs are CPAs have the ability to audit financial statements and have the ability to certify financial statements, right? Enrolled agents don't have that ability because we don't do any auditing. I don't want to do auditing. From what I know, I'd rather have an AI do it. Eventually it will, but that's another story. So that's what CPAs, everybody knows CPAs, right? Enrolled agents is federal. Essentially a federal license. CPAs, each state has its own CPA board with its own requirements, right? So some CPAs require that you have X amount of time in accounting. Some require you to have a bachelor's degree before you can sit for the exam. Some allow you to just sit for the exam, right? It really depends on that state's CPA board, right? So that's what CPAs are. Again, they are tax professionals. Some of them are. Some of them focus on things that are not tax preparation. Some of them focus on auditing, or just finances, corporate finance in general. So just make sure that if you are going with a CPA, that their focus is taxes, right? And then you have attorneys. Now you have bar licensed attorneys that can represent you in front of tax court, right? So there's the IRS, and if it cannot get resolved within the IRS, then you're going to tax court. That's where they go after, the criminal penalties, and they do all that. Or if you are really, really wanting to fight a deduction that you really, really want to take, you could go take it all the way up if it's not resolved within the IRS. Or if you don't like the resolution within the IRS, you can take it up to tax court. CPAs and enrolled agents cannot represent you in front of tax court. Only attorneys can. There are designees that can actually represent you in front of tax court that are not attorneys. So, like, for example, I can go ahead and take an exam to represent people in front of tax court. From my understanding of that test, it's probably better just to become an attorney, because this test is supposedly very, 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 very hard to pass, right? So really, those are the three major licenses and certifications when it comes to tax preparation. There is some limited representation that can be done by annual filing season program participants. So they take they take a test every year, and there is some continuing education requirements, etc., for all three of them. But they are limited in what they can and can't represent you on, right? So each individual is going to have a different price, right? CPAs, attorneys, enrolled agents, and annual filing season program participants, they're all going to charge you a different price. So just make sure you sit down and talk to them and get to know that person before you actually, allow them to prepare your taxes. And having said that, there's a lot of shops. So I do contract work for different companies also. There's a lot of people out there in the market that are preparing what they call what I like to call ghost preparers, right? So basically what they do is, because they can't obtain a P10 or any of the other certifications for whatever reason, the P10 is the preparer's tax identification number. So basically the IRS says, okay, if you're going to charge people for taxes, we want to know who you are. So they do kind of a brief background check just to make sure you're not a felon. And then they say, okay, you can now charge people to prepare taxes. That's really all you need to become a tax preparer. But some people actually bypass that. So they don't even get the P10. They basically use TurboTax, sign it as if they were you. And then, sometimes people don't really realize that that's what's happening. So those are ghost preparers. And they'll charge you X, and then TurboTax will, like, for example, send you a bill. And then you're like, well, wait a minute. Why am I getting a bill if I paid my tax preparer? Yeah, that's because that tax preparer was a ghost preparer using the TurboTax software or the H&R Block software or whatever it is to submit the tax returns. So that is illegal, right? Like, you can't do that according to the IRS. So you have to have a P10 to actually submit a return to the IRS. So just make sure that when you are interviewing tax preparers out there, that they at the very minimum have a P10 to actually help you prepare your taxes, right? Ideally, you would want them to be either attorneys, enrolled agents, CPAs, or annual filing season program participants. But at the very, very minimum, make sure they have an active P10, okay? So that's all I really wanted to talk about this week. If you have any other, topics that you want me to discuss, let me know. I'll think about kind of what we'll discuss for the next couple of weeks. Sorry for the IT issues early. Promise I'll get that fixed by the next one. I'm not sure what's going on, but I'll have to test it during the Call of Duty stream this weekend, so stay tuned for that. Like I said, yeah, if you have any comments or anything, just leave a comment, let me know. Send me an email, shoot me a text, give me a call. Stop by 902 Gambler on Wednesdays. I'm there. And then on Fridays, I'm at Geekdom. Scan the QR code up here. So that way you can get access to all the socials and everything. But yeah, that's pretty much it for today. Pending your questions, I'll catch you in the next one. Have a great Thursday.